Yo, what's up, family? How's everyone doing today?
Doing
Welcome to,
all right, doing all right.
welcome to the ETM Media Group, EMEN the Media Group platform. We have a wonderful guest on today, the one and only, and my friend and CPA, Dwayne Green. What's up, Dwayne? How you doing?
Hey, how you doing?
Doing well, man. Thanks for coming on to this platform. We're going to be talking about a wonderful subject called taxes, which I'm sure you're vaguely familiar with it, just a little bit. Yeah, so we're going to post up right now your services and your business, Green Street Financial, and we're definitely going to get into it, what you do and how you came about your current uh, business model, and at a later time. But Kim, maybe let's go into the in the news, or before we go into the news, let's actually give a shout out to our fellow comrade Earl Simmons, DMX, and also uh, Dante Wright. So let's have about a moment in silence for rest and power moment, and then we'll get busy here.
I say it's definitely been a tough week. Everything going on. So let's see what is going on in the news. Amazon Union fell. Why don't you take this one, Yamoya?
All right, pull it up. Okay. So, this in regards to the union that they were trying to, uh, I guess, vote on within the last past month, and I guess it failed. So let's go over it. So Amazon denies intimidating employees in its official response to the failed union election in Alabama. Amazon has released its official response to the results of the union election at its Ben Simmer, Alabama warehouse, in which employees voted against forming the company's first ever union. The company thanked employees for taking part in the election and said in the end, 16% of workers in the warehouse voted for forming a union. A total 55% of the warehouse's 5,800 strong workforce took part in the union election. The final tally counted 1,798 votes against unionizing and 738 votes for the union. Amazon pushed back against allegations made by the Retail, Wholesale, and Department Store Union, RWDSU, that it illegally tampered with the election by intimidating workers. Quote, it's easy to predict the union will say that Amazon won this election because we intimidated employees, but that's not true. Our employees heard for more anti-Amazon messages from the union, policymakers, and media outlets than they heard from us. End quote, Amazon said. So, yep, that was a good old Amazon. Supposedly, um, from my understanding, there might actually be some lawsuits or maybe some litigation against Amazon after the vote. So we'll have to see what the other unions at that particular point are going to do in the near future.
Yeah, I'll have to look in that a little future myself. I'd like to know what the reasons for the employees that voted against it, why they did that. Let's see what else is in the news. Top Army soldier, Black Lieutenant, pepper sprayed by police, the reality some of our soldiers face. Last week, footage was released of two police officers near Norfolk, Virginia, drawing their weapons and pepper spraying Army Lieutenant Canon Nazario, a health services specialist in the Virginia National Guard. The footage went viral, and Nazario's legal team has since filed a $1 million civil rights case against police department in Windsor, Virginia, where the incident took place. The department announced Monday that one of the two officers involved in the incident was fired after the internal investigation determined he failed to follow the department's policies. Grinson declined to discuss the lawsuit, but said he had learned that Nazario was receiving the support from his leadership that he leads during this time. In another tweet, he made reference to an ongoing efforts by Defense Department to root out racist behavior and acts of extremism within its ranks, and how the military interacts with a general public that is also grappling with these social issues. So I believe I saw that video. I mean, I'm seeing so many videos of Black people being accosted by the cops. Was this a traffic stop? Do you know? Is that what started this altercation?
Yeah, from my understanding, police pulled them over, and I've only seen very limited amount of footage, but the footage that I have seen, they basically pulled him over, told him to put his hands out, pulled out some guns, or at least one officer pulled out a gun, and then the other officer, I believe, then told him to get out the car, and then he complied, but for some reason the other police officer ended up pepper spraying him for no apparent reason. So I think there is a lawsuit involved in that particular incident from the military soldier. I don't know, Dwayne, did you hear about that incident? Have you heard about the military
That
guy?
particular incident I've not heard of. I've heard of a couple other ones. And unfortunately, we as minorities have to think like that because even this evening, for instance, I drive a car more expensive than most. And I noticed as I was running to the store, the police started following me. So my initial thought was, oh, it's not going down like that. So I immediately turned into a crowded parking lot and pulled up in front of a store that had a bunch of people. So I said, if something goes down, I've got witnesses. Because otherwise, if they just pulled me over on the side of the street, no one would have saw it. So
Yeah.
unfortunately, we have to think like that.
That's very unfortunate that we have to think like that. So, hopefully something will come about to dismantle some of these supremacy systems. Our next story kind of touches on actions that are being taken. CDC declares racism is a serious public health threat. The Centers for Disease Control and Prevention on Thursday declared racism a serious public health threat and outlined steps it will take to address it. It affects the health of our entire nation, CDC Director Rochelle Walensky said in a statement. The CDC is the largest public health group to make that statement, but joins many other groups that have done the same. The American Public Health Association says that more than 170 local and state leaders and public health entities have declared racism a public health crisis or emergency. One of the most visible examples currently is found in the pandemic, which, because of racism, has disproportionately affected people of color through structural barriers, Walensky said. People from ethnic and racial minority groups are at greater risk of getting COVID-19 and of dying from it. As Medscape Medical News previously reported, Harvard Medical School researchers found that healthcare workers of color were more likely to care for patients with suspected or confirmed COVID-19, more likely to report using inadequate protective gear, and nearly twice as likely as white colleagues to test positive for the virus. The CDC listed some ways it will address racism. First, Walensky said the agency is using federal COVID-19 funding to invest in communities of color as well as other disproportionately affected groups to address healthcare gaps. The CDC also added a new section to its website dedicated to racism and health. The data show that racial and ethnic minority groups throughout the United States experience higher rates of illness and death across a wide range of health conditions, including diabetes, hypertension, obesity, asthma, and heart disease, when compared to their white counterparts. Walensky writes in a commentary on the site. She said that the CDC will also continue to study social determinants' effects on health outcomes and racism's effects on health. Is that enough or at least a good start?
Hey, that's better than nothing. I mean, black folks, since we've been on this land called America for the past 400 years, been talking about, our, public health issues, since enslavement on this place called America. And so I guess finally CDC decided to step up and say, oh, it's really a public health concern now that racism. Well, it's better than, nothing.
It's a
Start.
start, I guess, and at least they're having these conversations. In the city of Sacramento, out here where we're both at, they also declared racism a public health crisis. So we'll see where it goes. Hopefully, it's not just lip service, and they actually plan to do something about it.
Yep. So is that do we want to roll the in the news? Do we have the in the news clip or no? Do we not?
I don't
No,
think
we don't have the
so.
in the news. Oh yeah, we do. I think so. I'm gonna run it real quick and then be
Okay.
right back,
Uh,
fam. That was in the
Okay.
news.
Okay,
And we
yeah,
back.
there it is. There it is there. All right. Well, I guess on to our topic of discussion, which is taxes. Taxes, it's tax season, and I'm sure people are um, having a sigh of relief that we've got a little bit of a reprieve. Taxes, maybe you can talk to us a little bit more about that, Dwayne, on the extension that we're receiving this year to
Right.
tax season. Just in
So,
case anyone's thinking it
okay.
has to be done by Thursday.
So I would say individuals have to check what state they're in. From a federal level, yes, federal has extended it to May 17th. So from a federal level, you have till May 17th to postmark it or e-file it. Now, on a state level, that's where you have to be cautious because states have the right to extend it as federal or keep it the same. I know for a fact Arizona, where I am, because I'm in Phoenix, they have chosen to extend it to May 17th also to be in line with the federal. Not every state does that, so I just say be mindful of that and check and see what your state's deadline is, because there are some situations where the state deadline remains the same, so it'll be like April 15th, but from a federal standpoint, you have till May 17th. So you just want to be cautious of that, especially if you owe, because if you owe um, and the state is due April 15th, they're going to start assessing penalties from April 16th. They're not waiting till May 17th or anything like that.
Okay, so check with your individual states to see if there's an extension in play that aligns
Yeah.
with the federal extension, or else get it done by Thursday, which is coming up quick.
Exactly. And you can, if you go to the federal website, irs.gov, it allows you to look up the different state websites and you can verify for your state what their deadline is.
Okay, that's good information. All right, so it's kind of a different tax year this year with all of the COVID assistance that's been out there and unemployment, things of that nature, PPP. Um, we'll talk about some of the businesses and what they can be looking for this year in filing their taxes, sole proprietorships, partnerships, corporations, limited liability. As far as people, filing under sole proprietor or freelance or contractor even is being allowed to apply for some of these COVID funds. Do you have any advice for them on, how they can take advantage of some of that extra funding that's out there?
Yeah, and before I get into that real quick, I just wanted to mention, as we were talking about the tax deadlines and so forth, for 2020, there were two stimulus payments. The first one was 1,200, the second one was 600. If for some reason you did not get the stimulus payment for 2020, either of those two or both of those two, you can claim the rebate recovery credit on your 2020 taxes, which allows you to add those numbers in there. And there's a worksheet within the tax instructions that allows you to figure out what you're eligible for, and add those numbers in there. So if you did not get it, they will give it to you on your tax return.
Okay, and that was the rebate recovery credit. Is that what you called it?
That's correct. Yes. So when you're doing your 2020 taxes, if you did not get either of the two stimulus payments last year, you would claim what's called the rebate recovery credit. So let's say you did not get either payment and you're single. That means that's 1,200 plus 600. You're going to claim it. Now they're supposed to check it on the other end because it does have, what's the word I want to use? Salary limitations. So if you make 75,000 or less, you're entitled to the entire 1,200 or 600. There's a sliding scale between 75,000 and 99,000 where it fades out. If you're making 99 or above, you're not getting any of it.
Okay, thank you for that information.
Yeah, thanks, man. Great info.
Okay. So, people who may have been, side hustling, freelancing, and doing a lot of gig work this year, how do they take advantage of anything that might be out there that's COVID related and filing? And I know another concern is unemployment. A lot of people were on unemployment, and I believe that they are giving a break on the first 10,000, 10.5. And then what can people expect?
Let's see. So from a tax filing standpoint, really the only things for COVID really are, number one, that they've delayed the filing deadline. And then two, if you did not get your stimulus payment, you can, claim that rebate recovery credit. Other than that, it's just a case-by-case basis, really. Like you mentioned, a certain portion of the unemployment income is not taxable based on the whole COVID situation, whereas normally what happens really is if you get unemployment, you're going to get what's called, I think it's a 1099 from the federal. And that's going to say, this is how much unemployment you received. This is how much taxes you paid on it. So when you're doing your taxes, they're looking at all your income. So your income is going to be the W-2s, the unemployment. If you worked a side hustle and got a 1099 from them because you were a contractor and you were not their actual employee, they add all those things together. And then they run them through a certain formula to see what's taxable and what's not. Because some of your unemployment, like you said, this year will be not taxable. Also, if you think things like the 401k, if you withdrew money from your 401k in 2020, I want to say it's a $10,000 limit, but for that first 10,000 or whatever, you do not get the penalty on it. So 401k, if you're over 59 and a half, you withdraw it and all they do is they add it to your income and they tax you on it. If you're under 59 and a half, whatever dollar amount you take out, there's normally a 10% penalty on top of that. Well, for 2020, because of COVID, it looks like they were waiving that penalty, but you would still get taxed on it. It would flow into your rest of your income and you'd still possibly get taxed on it.
Okay. Well, just in the work that you've been doing in this tax season, are you seeing that people are getting sticker shock with what they owe based on, these rules?
I would
tweak
say
in the rules?
actually the rules have been pretty beneficial to everyone. The people I've seen, and I have clients, I live in Phoenix, Arizona. I have clients in California, Arizona, Texas, Florida, Maryland, New Jersey, New York. And I think the thing I've seen most is the people that do get sticker shock, like you said, they earned it, so to speak, because they have their W-4 adjusted in such a manner where almost no taxes gets taken out, and then they get slammed when taxes are done, and they're like, how do I owe all this? Classic example, I have several different clients. One of them, I would say, made about 99,000 for the year. And for that whole year, because of the way they adjusted their W-4 with their job, they only paid $200 in taxes. Another individual made $45,000 for the year, and the entire year they paid 84 cents in federal taxes. So when you adjust your W-4 and do things like that, it's going to harm you in the long run, because now you've got, instead of dealing with it and learning to live within your means throughout the year, you've now got a situation where you're still dealing with that same salary, but now you owe the government $10,000 and you have to figure out how to pay it. So that's where I've seen the damage. Other than that, I think people's struggles throughout 2020 have really been more so because they may have lost work hours or lost their job altogether and were not able to meet their needs of their home. But it's really been like either that or they're not paying enough taxes on their W-4. Those are really the only negative things I've seen with people so far.
But wasn't that a concession that was made with COVID, that employees were able to adjust their W-4s to not take taxes out? I thought I heard something about that. I don't know. I got,
You can.
let go in the downturn, but
Oh, okay.
yeah.
Yeah, you can always adjust your W-4. There's no special rhyme or rule to it. You're free to do what you would like. But the thing is, at the end of the year, when that all flows into your income as you're doing your taxes, you do run the risk of possibly having to owe a little bit more, depending on like if you adjusted your W-4 in such a manner where they were taking out no taxes, but you made enough that you're going to get taxed. That's where you kind of run into that issue.
Okay, I just thought that there was some kind of special concession or government forgiveness because of COVID that allowed people to hold on to more of their earned income, but
Not
maybe
that I'm
not.
aware of. Yeah, I've not
Okay.
seen that. People, regardless of what the laws are, you can always adjust your W-4 however you'd like. And even if you're making $100,000 a year, you can say, take out no taxes. Where that's going to bite you is when you do file your taxes, they're going to be like, okay, this person made 100,000 and paid no taxes, so they owe us now. So that's where it's going to bite you.
Okay. And then what about some of the rebates that are, wrapped up in the, COVID relief, like the child tax is going up? Are people seeing, big paydays because of the COVID relief in their taxes?
I wouldn't say necessarily big paydays. I think it's normal. Like, for instance, you mentioned the child tax credit. That's a credit that's always been around. Even with 2020, it's at $2,000 per child if you fall within the income bracket. If your income bracket is too high, you kind of are pushed out of it because they figure your income bracket is too high, you don't need it. But as long as you fall within a certain income bracket, whether you're married filing jointly or you are single or head of household, you'll still get it. It's $2,000 per child. And there is a phase out range for it where, just like with the stimulus payments, the first two stimulus payments last year, the range was 75,000 to 99,000. So if you made 75 or less, you got the entire payment. If you made somewhere between 75 and 99, it was a sliding scale and you got a portion of that payment. And if you made over 99, you got nothing because you phased out of it. So it's the same thing with the child tax credit. I can't remember the dollar amount off my head. And the dollar amount is different if you're single or married filing jointly. If you make within that range, you'll get a portion of it. If you make below that range, you get all of it. And if you make over that range, you don't get any of the child tax credit.
Okay. So it's a pretty standard year you
Yeah.
see, because I thought there was something like, the Biden administration was coming out talking about cutting poverty 50% in half. So I thought that, child tax was going up like to 36 per child.
Yeah, there is something out there, but that does not affect 2020. I did read about that with Biden and his administration team. And from what I was reading, like I said, for 2020, it's based off of $2,000 per child, but they're trying to get it official to raise it to $3,100 per child. And if they can get that done before December 31st of this year, that would be in effect for our 2021 taxes. If they don't get it done, it would still stay at $2,000 per child.
I see. So 2021, we're talking 2021 tax season for anything.
Right, exactly.
Okay. All right. That makes sense. Okay. Let's see. Let's just really quickly run through the different types of businesses that there
Sure.
are. Corporations. Do you deal with much corporate tax filings?
That's partnerships up there.
This is
Different.
partnerships.
Shoot,
Um,
you want to go? I'm
Perfect.
sorry,
You
Dwayne.
had a slide that just listed the bullet points like sole proprietorship, so forth. Do you want to do that, or you just want to go off of these? Whatever works.
Yeah, let's go with the slide, Kim.
All
First.
right.
Yeah.
Okay. Yeah, we can start here, and we can always delve into more if we need to. That's not an issue.
All right.
So, sole proprietorship, that does not require any kind of paperwork filing, such as an article of organization or anything. If you want to do a sole proprietorship, you start it. There's no issues, no paperwork required. Um, let's see. The thing is, you want to be careful about what company name you use. So you may want to at least do some type of paperwork filing so that blocks anyone from using that company name that you want to use. The benefit of a sole proprietorship is you're running it yourself. So from a management perspective, there's not going to be any delays or backsliding because you don't have to agree with any other partners. Whatever decisions you make are the final decisions. The downside to a sole proprietorship, depending on what type of business it is and how grand your business is, you run the risk of lawsuits. So let's say you have a sole proprietorship because you're a licensed cosmetologist. And this is just the first thing that came to my mind. So let's say you're a licensed cosmetologist, you do women's hair, and you have this sole proprietorship. Forbid you should maybe cause a chemical burn, a bad chemical burn to a woman's hair when you're doing it. She then has the ability, depending on how bad that chemical burn is, to sue you. Now, because you have a sole proprietorship, she can sue you, and if your business has no money, she can then go after your personal assets like your car and your house. So that's the pros and the cons to sole proprietorship. Also, with the sole proprietorship, as with any of these businesses, you want to make sure you keep documentation, all your revenues, all your expenses, because at the end of the year, you're going to have to put those revenues and expenses and categorize them on a Schedule C, which is a federal tax form. And that Schedule C, after you net your revenues and expenses, that net loss or net gain rolls onto your 1040 and gets added or subtracted from your other income, like your W-2s and so forth.
Okay.
And I think the next one was, and just stop me if anyone has questions along the way. The next one is a partnership. Partnership is exactly like a sole proprietorship, except there's going to be at least you and one other person. So you and this other person, the downside to a partnership is any type of management decisions, both of you have to agree on. Other than that, it's still very similar. There's no paperwork that's required to be filed for a partnership. And depending on the type of business, if a customer should sue you for a big enough dollar amount, they can come after both partners' personal assets if the business is out of money, or if the business doesn't have like liability insurance of some sorts.
And do they file taxes, these partners, like as a joint
Actually,
tax?
I'm glad you mentioned that because I did forget to mention that. So although the partnership does not require work to be, it does not require paperwork to be filed to form a legal partnership. What usually happens is there usually is a separate partnership return, which is called a 1065, that has to be filed. So both partners just have to get together and say, hey, let's do this, or have their accountant do it. And so they would file that 1065 with the federal. And that's just saying, hey, this is all the revenue and expenses from the partnership. But now let's say the accountant is preparing that. The accountant now has to, in addition to the 1065, also provide Schedule K1s. So K1 goes to each partner and it shows their percentage of the revenue and their percentage of the expenses, and they include that on their personal tax return.
Okay.
All
And then how about corporations? We hear a lot about corporate welfare. Are they paying their fair share in taxes?
Honestly, most probably are not. Unfortunately, that's just the way the cookie crumbles. When I think of corporations, for the most part, from my experience of dealing with corporations, it's companies that are publicly traded on some stock exchange, whether it's the London Stock Exchange, the New York Stock Exchange. And there are certain rules in place for these corporations to where income is not double taxed, if you will. So the corporation makes money and they have to pay a percentage of taxes on that money. But if it's then a corporation that makes money and then has stock in that corporation and we buy stock and we're making money off that stock, they can't tax it twice, so to speak. But the money we make, we do have to include on our personal income, which it gets taxed that way. So let's say, let me give a clearer example. Let's say you have stock in Dial Corp. They're known for soap and things like that. And you buy this stock. When they make their money, they get taxed on that. But then when they distribute the other portion of what they make to us, because we bought shares in them, and that's our benefit from, our, what do you call it? That's our dividend from buying those stocks, and holding them for that time period. So they don't get taxed on the portion that they give out to us stockholders. They only get taxed on the portion they keep. And then the portion the stockholders get, they do have to include that on their income, and they could possibly get taxed on that. So it's like it avoids double taxation, but on the same token, corporations get charged a lot less percentage of tax than individuals do, like you and I.
Okay. And the last one was the LLC. How do that differ from corporations and the other
Okay.
entities?
So LLC, for instance, like my accounting firm is, well, actually mine is called a PLLC, and the P stands for practice. And what that means is any type of, I'm sorry, not practice, professional. So my company is a PLLC, a professional limited liability company. Anytime you have a company that provides a service, they call it a PLLC as opposed to just a standard LLC. The difference with those is you do have to file paperwork with your state to be a LLC or a PLLC. That paperwork is not too expensive. Like in Arizona, I want to say the standard cost to file that paperwork was about $75 or $80.
Oh,
And then, and that's just to file it. And then
let's
that
talk about
includes,
California's.
say that again?
I said, let's not talk about California's. I think our LLC is like what, 800, 850, something like that, Kim? I think
Yeah, something like
a little
that.
bit more expensive.
Oh, just a tad bit. And there's a lot of different things too, because you have like your LLC that costs $80, in Arizona anyway. If you have a nonprofit, when you apply for nonprofit status at the state level, that's just a couple of dollars. But then if you apply for nonprofit status at a federal level, and I've done a few of those, that application is about $600 to submit. It's a 24-page application. At least the first 13 pages are applicable to every business. And then depending on the type of business, the remaining pages up to page 24 may or may not be applicable. So there's a large pricing for when it comes to filing some of these forms, especially with federal. But we'll circle back. But before I get too far off topic, with the LLC, you've got your paperwork that you have to file. When you're filing that paperwork, you want to, or before you file that paperwork, you want to check the name of your company on the state website, because you want to make sure no one else is using that name. Because if they're using that name already, your paperwork will get rejected because two companies can't have the same name. And then you fill out all your paperwork in terms of the address you're using, what type of business it is. You submit it. It takes, I know in Arizona, it takes about 1 to 2 months for them to process it, but you do have the option of expediting it, which expediting it costs like another $40 or something like that. Once that paperwork is done, you can now officially say, from a tax standpoint, that you are an LLC or a PLLC. The only things you have to do on a federal level is, if you are a nonprofit, you probably want to file for nonprofit status on a federal level, which that's the $600 submission that I told you about. And then also, no matter what type of business you are, On a federal level, you want to apply for EIN. That's an electronic identification number. And what that is, it's your business's social security number. So anytime you do business, you don't want to be giving everyone your social security number. That's for you and your accountant to know. So whenever you do business with your company, that EIN is a way of identifying your company because every EIN is unique, just like each of us has a different social security number. So really, from an LLC standpoint, you want to make sure you file with the state and get that organized and let them know what type of company you are. Let your company name be associated with you, not with someone else. You want to apply for your EIN number on a federal level. And that's it. After that, you just run your business unless you need to apply for nonprofit status from the feds. But as you're running your business, you just want to make sure you keep proper bookkeeping because at the end of the year, that's extremely critical to be able to document your revenues and expenses. That way, it's easier for your accountant or easier for you to pull it together when you need to.
All
Oh, and
right, and you keep saying file your nonprofit status with the feds. What was the other option?
filing to be a nonprofit with the feds is if you're a nonprofit such as a church or a nonprofit organization like Salvation Army, things like that. So let's say
But you said file with the feds, but who else could you file with if you didn't file with the feds? How else would
well,
you?
you would have to first start off by filing with your state,
Okay.
and you would have to file what's called articles of organization. And that's when you check for your company name to make sure no one else is using it. And once you file all that paperwork and your company is now officially an LLC in that state, you then next step go to the federal and you apply for your EIN, which is your company's social security number. And then the third step is dependent on if you're a nonprofit or not. If you are a nonprofit, then you may also consider filing with the federal to get nonprofit status on a federal level. Because on a state level, nonprofit status just means, hey, this is a nonprofit organization. There's no pro or con or tax benefit or non-tax benefit. But on a federal level, if you are a nonprofit, there are tremendous tax benefits. Like you don't pay taxes on a lot of stuff. A lot of your activity you just don't pay taxes on. But and then also if you're a nonprofit, I want to say if you make below 50,000 a year, and because the intent with nonprofits is you're making money, but you're reinvesting it into your purpose or your cause. So if your revenue, even though you're reinvesting it into your purpose, is less than 50,000, a nonprofit does not have to actually file a return, or a tax return, I should say. They do have to file what's called an information return. And that information return is just high level saying, these are the executives of our company. This is what we do. This is the money we made. And you're just putting a dollar figure. You're not putting details. Because if they audit you, you then have to prove that you say made that less than 50,000 and you were not required to file a tax return. So therefore, you're just filing the information return, which is a lot less detailed.
Okay, so you can file nonprofit status at the state level, but the tax exemptions don't kick in until you file with the federals, with the feds.
Correct. Exactly. Because the state just wants to know what type of business you have. But at a federal level, if they do grant you nonprofit status, you get tremendous tax breaks.
Okay,
There
that
you go. For all those
clarifies
wait
it.
till you start a nonprofit. Get up and
You
game,
know
man.
what? And there's so many options out there. Like if you got people together and you said, okay, I want to help the homeless in my community by handing out bottled water and maybe once a month providing sandwiches. That's a nonprofit. If that's your company's main purpose, you still want to file with the state and then possibly file with federal if you need to. But there's so many different nonprofit opportunities. It's not just like church like people think.
All right, now let's take a look at some of these tax forms that people have to weed through every year. There's the 1096, the 1097, the 1098, the 1099 in red, which most people are familiar with. The 3921, 3922, 5498, and W2G.
Okay, so I'll start from the top. Okay, yeah, leave it right there. That works for me. Uh, I'm looking at this from a corporate angle, but then for the angles that are individual, I will point those out too. So, for instance, starting with the 1096, a 1096 is a cover sheet. It's called an annual summary and transmittal of U.S. information return. And so when you file a lot of these other forms at the bottom, and we'll go down them one by one, you're going to need a cover sheet. And that cover sheet, which is the 1096, basically has your information like name, company name, um, and then there's a checkbox saying, okay, this cover sheet is for 1099s or this cover sheet is for 1098s. So that's what the 1096 is. The 1097, and that 1096 applies to all those other items below it. So if you're submitting those items, which usually is from a corporate standpoint, you're going to have to submit a 1096 with that. But as I go down, I'll point out the differences. So a 1097, for instance, that's for any tax filer claiming certain bond credits. They have to complete that form. Usually companies claim bond credits. If an individual did purchase a bond and it's something where they are eligible for a credit for, then the individual would have to fill out that 1097 also. Then you have 1098s. Most of us, like you and I, look at 1098s as the mortgage interest form. So you get a 1098 in the mail. It says, hey, in 2020, you paid your financial institution this much money for mortgage premium, this much in interest, this much in real estate taxes. That's what's provided on a 1098. From a financial institution level, they have to take that 1096 cover page, fill it out with their financial institution information, checkmark 1098, and that's it. But then they have to submit all the 1098s they send to all their customers that have a mortgage with them. So for you and I, we just get that one 1098 saying, hey, this is what you paid on your loan for interest, real estate, etc. Whereas that mortgage holder, they have to submit a 1096 plus a 1098 for every single customer that holds a mortgage with their financial institution, and they're submitting that to the IRS. Let's see, the 1099, that there's various different 1099s with various different letters, so I'll just go high level. A 1099 is going to be income. That income can be from a pension, an annuity, a 401k, or from a contractor that hired you to work on a job, but you're not their employee. It was just like a one-time thing, or even if you guys work together 50 times for the year, you either have to be their employee or you have to be a private contractor. So if you're not their employee, they will pay you and they will document it on a 1099. Now, they're only required to give you a 1099 if they paid you more than $600 for the year. So even if you worked for them 3 times, and if you don't total up to $600, they're not required to send you a 1099. And also on the same token, you're not required to put that on your taxes. If there's any questions along the way, just stop me.
So you said $600 for the entire year.
That's correct. So like when you look at January 1, 2020 to December 31, 2020, if you worked with such and such company, ABC company, and even if you worked with, regardless of the amount of times you worked with them, if you did not make more than $600, you do not have to claim it on your taxes, and they do not have to send you a 1099, or they do not have to file a 1099 with the IRS.
Okay. So basically, if you make over $600 a year in any capacity, you have to file taxes.
In any capacity from any one entity. Because technically, if you really want to get technical, you could work with 5 different entities, and if none of them paid you more than $600, you don't have to file for any of that.
Okay.
Makes
All
sense.
right. Yeah.
And then, so as we go on to the 3921 and 3922, the 3921 is, and 3922, those are really related to corporations, not to individuals. A 3921 is a form that they report exercise of incentive stock option. So the company, let's say I can use myself for example. So my company back in like 2019, and this is the corporate company I work for, they gave me a certain level of stock to stay with them. And then, although they gave me that stock in April of 2019, they I become vested April 1st of every year over like a 3-year period. And so when April 1st of 2020 came around and I cashed out the portion of stock that I was eligible to cash out, that company then had to take a 1096, fill that out, saying, hey, we're submitting some 1099 info. I'm sorry, we're submitting some 3921 info. And these are the employees that exercised their option to cash out our stock. So that's what the 3921 is. So that is the corporate company telling the IRS, these are the individuals who we offered incentive stock to who actually exercised their option and cashed out that stock.
Okay, so again, like with the mortgages, where the corporation has to fill out the 1096 and then add everybody's 1098, same thing. Your company filled
Exactly.
out the 1096 cover page and included everybody who took advantage of the 3921.
Correct. Exactly right. Now, um, it doesn't matter how many people received stock incentive options. That 3921 is only dealing with the people that received it that actually cashed it out.
Mm.
People are still holding on to it because they want to cash it out later. They're not going to be on that 3921 report.
Okay, so that's dealing with stock options. Is that the say? I know a lot more people are investing, have been investing in stocks during the pandemic. Should they be on the lookout for 3921s or only if they cash out stocks?
No, because 3921 is only the corporate people reporting to the IRS. What happens is, so what happens is, like you said, investing. If you're investing in certain stocks, that's going to be coming back to you on a 1099B as in boy. So let's say I'm with Chase Bank, for instance, and I decide to buy stocks from them. Not that I work for them or anything, because I just happen to know them, and let's say they're on the New York Stock Exchange, and I say, you know what, I'm going to invest in Chase. So I decide to buy stock from them. So what then happens is at the end of the year, I'll get several different forms. I'll get a 1099 div, that's DIV, and that's for any interest I earned on my stock that I held, during that year. I'll get a 1099B as in boy, and that shows proceeds from any stock that I sold, because you want to, and it gives you all the details, because when you fill your taxes out, if you did get a 1099B, you have to know things like what's your basis, i.e., what did you pay for that stock? What's your proceeds, i.e., how much did you get when you sold that stock? And then they're gonna match those two, and that'll determine your net gain or net loss. So if you were investing in stock and you get, like I said, the 1099 div, the 1099B, so that 3921 would not be applicable to an individual. That's only for corporate people to submit to the IRS.
Okay. And then the 3922?
3922, that's a corporate one also, and that's for transfer of stock acquired through an employee stock purchase plan. So classic example is if you work for a company that is publicly traded and you decide, I'd like to buy some stock from my company, but I can't really afford or don't want to deal with that entire price per share right now. So what happens is your company withholds a certain amount of money from you each paycheck and has it in a separate account for, stock that you purchase through the employee stock purchase plan. And when that money gets to be enough, they buy a share of stock. And so as they buy that share of stock, because you have enough money in this account that they're saving up for you, they then have to report to the IRS, hey, we just sold this share of stock through the employee stock purchase plan. So that's what the 3922 is.
All right. And the 5498.
Sure. The 5498 is a personal one, so anyone like you or I could have to deal with that. The 5498 is when you roll over money from an IRA to a trustee or custodian that subsequently closed the account. So what that means is you're at job A and you have a 401k or IRA, and you leave job A and you go to job B and you roll over that 401k money, but now for whatever reason, job B closed their 401k plan. So that's why you comes in the form 5498, where you have to report the details of that on that form when you file your taxes. And that's a tax form that, like, if that happened to you or I, you would have to fill out that form and include it with our tax return.
Dwayne, before we go on to W2G, I have a question about the 401k. So,
Yeah.
it seems like you have a 401k from a previous job. Can you have two 401ks? Like, do you have
You
to roll it
can.
over, or can you have two like separate 401ks?
You can have two separate 401ks, because I personally have two separate 401ks right now, but I'm not touching the money, so it's not affecting me. If I tried to touch the money, then it would affect me. As long as your money is in legitimate 401k plans, you're not penalized in any way unless you try to withdraw that money. If you withdraw it before you're 59 and a half, they tax you on the amount of money because it goes on your tax return, and you also get a 10% penalty. So let's say you say, oh, I want to take out $10,000 out of my 401k, but you're only 50. You're going to get charged a 10% penalty. So that's $1,000 penalty right there for taking it out early. And then they're also going to add that 10,000 to your income, and you're going to get taxed on that too. So to rewind and answer your question, you can have more than one 401k.
Gotcha. Okay. Yeah, because some people, their jobs may be terminated or whatever, and then they pick up a new gig, and then they have another 401k option at their job. So I just wanted to get some clarification on that. Appreciate it.
Well, let me expand on that real quick also. So like in my situation, I have, in addition to my accounting firm, I have two other separate jobs with 401ks. So that's why I have two separate 401ks. And legally, there's no issue with that. But to address your point, you were saying you're at job A and you have a 401k, but you're now leaving job A and going to job B. What will usually happen is when you depart from job A, the 401k trustee will notify you, and you have a certain amount of time to get back to them. Otherwise, they're just going to cut you a check, and it is what it is at that point. But during that time period when you're communicating with them, even though you've left job A already, you can roll that 401k into an IRA or a 401k at another job, and that avoids the tax penalties. There's a form that the trustee would give you to fill out, the trustee from job A, and you would give them the details. So like if you've not got a job yet, you want to roll that into an IRA because that avoids you paying tax. If you have a new job and you're at job B, you can get the details from job B and tell the trustee from job A to roll that money over to job B's 401k. The trick to that go ahead.
Sorry. I was just going to say, and the only time the 5498 comes into play is if job B no longer offers the 401k plan.
Exactly. That's the main purpose for the 5498.
Okay.
And so we got about five minutes left into the program. Okay. So we might have to have a part two, but since we're talking about W-2s, can you explain the difference between, or if there's a difference between a W-2 and a W-2G?
Yes, there's a major difference. A W-2 is from your employer saying, like, for 2020, all employers have to put the W-2 in the mail to you by January 31st, and then you get it whenever you get it. But what the W-2 is saying, hey, for 2020, this is what we paid this individual. This is the federal taxes we withheld. This is the Medicare taxes we withheld. This is the state taxes we withheld, etc. That's just a standard W-2. A W-2G is for gamblers. So what that is if you go to a casino or any type of gambling activity, the state lottery, whatever it is, if you win above a certain amount within the year, like 2020, from January 1st to December 31st, if you win above a certain amount from any entity, whether that's the state lottery or a particular casino, they're required to give you a W-2G. And what that is just listing your gambling winnings. And your gambling winnings would really go on a Schedule A. If you're not itemizing, like you just take the standard deduction, the gambling winnings still have to be claimed as other income. But if you are itemizing and using a Schedule A, your Schedule A will allow you to write off the losses. But to give a more clear example, if you won $10,000 at the local casino for 2020, but you lost $20,000 throughout that same year to win that 10,000, you would still have to claim your $10,000 win, but you can only claim $10,000 in losses because they're not going to let you go negative. So that 10,000 win cancels out with the 10,000 in losses. You cannot claim the 20,000 in losses because they're not going to give you a deduction for gambling.
Dang, that's terrible for all y'all gamblers out there.
So it would basically be a wash.
Right. They'll let you do a wash, but they will not let you take a loss on it. So if you were to win 10,000, but you lost 20,000 to win that 10,000, you'll get a wash with the 10,000 win and 10,000 of the losses, and that's it.
Okay. And then we've talked about the 1099, so I'll just bring up this Schedule C here is what that says, because that sounds vaguely familiar. Can you talk about Schedule C a little bit?
Sure. So this is where I tell people and I tell all my clients it's so important to keep proper documentation. At the top, really, it's just going to be simple things like the name of your name, you own the company, and then item A is asking what's the type of business it is. Item C is asking what the business name is. When you go over to the right, item B, there are tax codes in the IRS guidebook for this form that there's a 6-digit code for every type of business. So you have to look up your 6-digit code, and that goes there. Item D, that's going to be your EIN number, because this Schedule C is like the mini tax return for your business, and it gets rolled into your personal tax return. So that employer ID, item D, that's going to be your EIN number, because you don't want to put your social on that stuff. And then part 1, that's going to be the income you made. Really, it's not too detailed. They just want to know the dollar amount you made. But part 2 is the detailed one. Your expenses have to fit into one of those categories. There is lines on page 2 that will allow you to add a few other expenses that are not listed in part 2. And then right down there where it says line 27A, that's where you would bring that total over from page 2 if you added extra expenses that were not there, because you want to get all your expenses there. And then from there, your revenue nets against your expenses, and that determines if you have a net loss or net gain. And that dollar amount, the negative number or the positive number, rolls over to your Form 1040. It actually rolls over to your Schedule 1 and then over to your Form 1040.
All right. I think we have a couple more slides, but I think, Kim, maybe we should probably stop it there and maybe do
we'll save the other ones for another time. But I'm interested to know, what type of education and schooling do you need to become a CPA? And also, are there a lot of Black CPAs in the industry?
So
means no.
no, there's not. There really is not. I can honestly tell you, when I went to school to get my CPA and was studying for it, there was one other Black gentleman. Everyone else was either white or Asian, but it was me and him. That was it. And then even in the professional world, as I look around, I know 2 older gentlemen that are CPAs. One, they're both Black. One is retired. The other one, I think, is close to retirement. but there really isn't that many blacks out there. That's why if a minority can get a CPA license, it is very beneficial to them. And, if they know what they're doing, companies look at them and they're like, you know, unfortunately, they might say, we want him because that's the token. Or they might say, oh, he really knows what he's doing. We want him. So I say it's a great certification to have, but a lot of people are scared of it because it does require a lot of homework and a lot of studying and a lot of test taking to get the license. And once you get the license, you have to complete 80 hours of CPE courses every 2 years to maintain your license. So it's not a cheap license to maintain. Now, to answer your other question about the education requirements, usually it's about 150 hours of college coursework. And then within that 150 hours, 24 hours have to be upper division business classes, and 18 hours separate from those 24 have to be upper division accounting classes. So that's the education requirement. Then also you have to work under a licensed CPA for at least 1 year. The education requirement is the same across the country in every state. The work requirement is different in every state. So in Arizona, for instance, I just had to work under a licensed CPA for 1 year, which I had done that before. So that counted and it was good. In Wisconsin, for instance, even though you have the education, you're required to work at a public accounting firm specifically for at least 2 years before they'll license you. But then after you get that education and that work requirement, somewhere within there, you also have to pass the exam. It's a 4-part exam. It's not cheap. It's like $50 application fee and a $250 fee per exam. And if you take it and you fail it, you have to wait till the next window. So they offer the 4 parts every time. I want to say January, February are test taking months. March is an off month, and it just goes through that cycle. 2 months on, 1 month off. And so if you January, February, you took any of the 4 parts, you can take all 4 if you want. But if you fail any of them, you have to wait till the April, May window to retake them. And once you pass your first exam, that starts the clock ticking. From that date, you have 18 months to pass your other 4. Otherwise, things start to drop off. So that first one will drop off and you'll have to retake it.
Oh, man.
So yeah. And, it's a very promising licensure to have, to the point where they've had to do a lot of cracking down on the test taking, because it got to the point where individuals were sneaking answers in. And
I was gonna ask if it's proctored, if they have a proctor.
Oh yeah, I'll tell you that in about 15 seconds. It used to be pen and paper. So people were writing answers on their shoes, writing answers on their hands, just doing the most. Well, because of that, and because they want it to be a prestigious license, they cracked down on it. So now you go to a test taking center and you take it on the computer. And even if someone is sitting next to you taking the same of the 4 exams, neither of you is going to have the same exam. Because the exams are now computer generated by a database. A lot of licensed CPAs got together and proposed questions. Those questions are all in a test bank. So when you log in, you're not going to get the same exact test as the person sitting next to you, because the test bank is going to make sure it gives different questions to every person that comes up to take the test. Also, because of the issue they've had with, I almost want to say theft, but the issue they've had with cheating, basically you go to this center, before you even get into the test taking room, you essentially have what's called a strip search. You have to lift your pants up so they can see your skin, so they know you're not sneaking anything in. You have to turn all your pockets inside out. If you have a sweater on, you have to open the sweater, and they'll search under between the shirt and the sweater. Wow. And also you have to be fingerprinted to get into the exam. So you have to hold your hand on a electronic reader that reads your fingerprints and scans them into the computer. And then once you walk into the room after you've passed all that, and also if you have glasses, be prepared for them to search your glasses and hope they don't leave fingerprints on them. Because one of the problems they had was individuals were putting cameras like right in between the glasses,
Wow.
and they were having people on the outside help them with the test.
Wow.
So,
Wow.
that's why they've cut all that out. So once you pass that and you get into the room, you sit at your computer, and about 3 feet above you is a camera looking down at you, watching your face, your hands on the keyboard, everything, and it's taping you take the exam.
Is there a time limit on the exam?
Yeah. Each exam, depending on the exam, they range between 3 and 4.5 hours is your allowed time limit, depending on each of the 4 sections. So once you sit down, when you get past all that extra stuff, and you type in your code, you've got about 5 minutes to type in your code because they expect you to get in there and be ready to go. Once you type in that code, it starts the exam. And no matter what you do from that point in time right there, that's when the clock starts ticking. So you have either 3 hours or 4.5 hours or whatever to finish the exam. If you do not, the computer shuts off. You can't cheat or finish. And also, it's required to pass to have 75% on each of the sections. But what people don't realize, just because you get a 75% does not mean you'll actually pass, because they have what's called an advisory score. So even if I busted my tail and I got a 75% on this section, and I know I did, that doesn't mean I'll get a 75, because my test then has to go before an advisory board composed of licensed CPAs, and they review my test, compare it to the other people that took the same test or the same section of test for that 2-month period, and they make a decision on if they want you to pass or not, because they don't want everyone to pass. So that's why.
Okay, so I got a question for you. Isn't that I mean, that's opened up for where somebody could, be discriminatory and racist, right? Just to be straightforward.
Not so much, because only a certain category of the boards of accountancy know who you are. Everything else is done by like an ID number. So the people that have to do those advisory decisions, they won't know your name. They'll know your ID number.
It sounds very institutionalized. And
It
you said
is
that
in
they
a
have
sense.
cameras on you, so
Well, they do that
we can
because,
see
and
you.
I get it. I felt awkward the first time I took a section, but I understand it now, because if I'm, wearing myself out studying and I'm like, I'm going to pass this, and you come in and you've got the camera on your eyeglasses and you've got cheat sheets under your clothes, it's unfair to me because you have all the answers and I have to remember them. So I get why they do that. And because they want to have it be like a prestigious license, they don't want everyone to pass it. That's why, I mean, if you clearly get above a 75, they can't dispute that. You have to pass it. But if you're right on the border, there is a chance you may not pass it, because the advisory team may say, well, this person with a 75 gets a 73. So they'll have to retake it. And yeah, so that's kind of how that cookie crumbles.
So they definitely want the serious ones, want to make sure you're serious, put you through a lot of hoops and checks and balances. But it is a pandemic-proof industry, death and taxes. I mean,
and the other secret to that too
no
is
getting around it.
Tidbit I want to say it's 2024 or 2025. They're going to change the exam to 5 parts instead of 4.
Wow.
I'm like, ooh, I'm glad I'm done.
So now that you're done, you don't have to worry about it again.
No, I never have to take it again, ever. Even if I transfer, like right now I'm licensed in Arizona, but I can have clients anywhere in the country. But if there's a requirement for a client to have me be licensed in their state, like if you had a business in California and the type of business you had, the requirement was for you to have a California licensed CPA, I can apply with the California Board of Accountancy and apply for what's called reciprocity. So basically I fill out forms and I pay them some money and they license me in California. And that's nice. I like that component because, like law, for instance, if you are a lawyer and you pass the bar in Arizona, but you now want to practice in California, you have to go to California and retake the bar.
Mm.
So fortunately for us, if we want licenses in other states or want to be licensed in other states, we do not have to take that exam again.
That's dope.
We have an acronym with CPAs. CPA means Certified Public Accountant, but internally, a lot of my CPA friends call it cannot pass again, meaning a lot
Oh.
of us don't know how we passed that exam.
Well, once you get in, it sounds like, a good field. And like I said, it sounds recession proof and
Right.
pandemic proof and all of that. So pipeline, I hope you're paying attention.
Exactly. It is pretty pandemic proof. Because I mean, even last year, and I think you more knows this, last year, I was like deathly sick and almost died because I had COVID.
Oh,
I was
wow.
hospitalized. It wore me out.
Boy.
But fortunately, I never had that issue of losing my job or losing hours on my job, because being in audit and accounting, like you said, that's recession proof and pandemic proof. So once I was able to get out of the hospital, I was out of work for like a month and a half while I recovered, but my job was sitting right there waiting for me.
Yeah,
Oh,
yeah, a good
well,
field to get into. Well, we certainly thank you for providing all this information. Very helpful, laying
Oh,
it out
not
in
a
layman's
problem.
terms for us, because I definitely need, help at tax prep time. So
It's all
thank you.
good, and I enjoyed it. So keep me posted whether I need to come back or you just so like we're all on here. How are the others listening? Are they listening through like a YouTube channel or through Facebook, or how are they listening?
Yes, through the YouTube channel. We're streaming live to our YouTube page.
yep.
Okay, so I'll touch base with you at some point so I can actually get that YouTube link, and also if you can keep me posted on future meetings, because I kind of like this forum, so I definitely like to stay in touch and listen to some of the other topics in the future.
Yeah, thanks, man. You came through and, as always, knowledgeable on all the topics. But before we go,
Uh-huh.
we want to give you a plug here and talk about your business called Green Street Financial. Do you want to give the audience a little information about Green Street Financial and where they can go to get in contact with you?
Yeah, sure. So you have the website up there. So as you can see in the upper left, that's my email address. I'm the only person with an email address because it's a PLLC, but essentially it's a sole proprietorship that's under a PLLC status because I'm the only person that works for the company. I decided to start it in 2018 because I'd been doing taxes at that point for about 20 years. And, there's always, get your side hustle going because you never know what will happen in corporate America. So finally in 2018, I started it because I was fed up with my current situation and my current employer. I still work for them, but I'm using it to my benefit until I decide to go elsewhere. But I was fed up with a situation where people were being promoted above me, and then they were asking me to train those people. But they wouldn't promote me because I allegedly didn't know everything. But then they would promote other people that did not know everything and ask me to train those people. So I was like, okay, you know what? I said, what goes around comes around. That's what I said to myself. So long story short, one white lady that they promoted above me because she was allegedly better educated than I was, she was coming back to me to ask me everything. And so eventually I stopped telling her anything and I stopped answering her phone calls. And eventually what happened, she got demoted to a lower position because everyone in the company started complaining that she didn't know how to handle an audit and she didn't know how to do things. So her position was taken away from her. And so things like that were happening. That's why I started my accounting firm, because I said, you know what? I'll use corporate America for the benefits right now, like the healthcare, because if you just have your own company, you now have the issue of healthcare, which you can be paying several hundred to $1,000 a month for healthcare for yourself,
Right.
because you're not going to qualify for access if you're making money at your company. So that's why I started the company. I said, hey, I already do this. And now that I have my CPA license, because I passed the test in 2017, but with the application process, I was not officially licensed till 2018. So I said, okay, I've been doing this stuff for 20 years. How can I build this into something bigger? And so I decided, now that I had my CPA license, to start my own firm. And I do taxes, I do bookkeeping, um, I do audits also, but I haven't done too many audits. I've only done 1 or 2 audits, but I have an audit background because I've been working in the audit field for the past 15 years. So that basis gives me the knowledge to do audits on my own for my own company. And it's not a conflict of interest because from a corporate standpoint, I do audits involving Medicaid issues and Medicaid drugs and things like that. So from a personal standpoint, I do audits for like other companies such as small businesses in the Valley, which when I say the Valley, I mean Phoenix. And so there's no conflict of interest. I'm not trying to steal my jobs clients and things like that. So that's how I was able to pull this together and build it on my own. And the next step that I'm heading into now that I've got the business established is I'm going after government contracts. Because what a lot of people don't know, regardless of what type of business you have, the government is required to use a certain amount of, they're required to delegate a certain amount of a certain percentage of their business to small businesses. So whether you're a trucking company and you own your own trucking company, whether you're an accountant, whatever it may be, there's websites to go on and apply. And so like now, from an accounting standpoint, I get an email every day with federal opportunities and with opportunities from 4 states that I chose, which are California, Arizona, Texas, and New York. I click on each opportunity, I read it. If it's an accounting opportunity or an audit opportunity that I want to pursue, I bid on it. Now, bidding on it does not mean I'm paying money. In my particular case, what the bidding means is I'm saying, hi, federal government, I like this particular audit opportunity, and I believe based on what's described, I can do it for this much money. So that's
So
what,
a RFP, basically.
correct, exactly. And
Okay.
so that's how I came into officially branding the business and trying to develop it and all that fun stuff.
Well, congratulations. That sounds like a great story and a way to, move up in your own regard if it wasn't happening in the corporate world. And like you said, the chickens always come home to roost. Speaking of which, before we head out of here, just talking about tomorrow's Fix HR 40 hearing, which is going to be a markup in the House Committee on the Judiciary. To mark up the reparations bill, HR 40 that's currently in federal Congress and has been for the last 30 years. So hopefully they'll be able to make some amendments to this thing to get it going, so we can finally realize reparations here in America.
Yeah, and if family, if you guys are watching this, it should be on the House Committee Judiciary YouTube page tomorrow. And there is actually a video that's on our ETM Media Group page. And within that video, there is the link to the Judiciary Markup Committee for tomorrow. So if you guys are listening to this, is it tomorrow, Kim? It's tomorrow, right?
It is tomorrow at 7
Yeah.
o'clock in the morning, Pacific Standard Time. It's going to be, 10 a.m. Eastern Standard
Eastern,
Time.
right.
So be sure to turn in for that. I'll just put the little ticker up to our YouTube page. So YouTube, etmmediagroup.com. If you go, we have a little video up regarding the call to action. We've been calling our Congress members and legislators for the last couple of days, telling them to take this serious. So head on over to our YouTube page, grab the link so you can join in and watch this important historic markup session.
Yep. So I think, Kim, that's a wrap, isn't it?
I think that's a wrap. So I just will come back one more time to thank Dwayne and tell him good evening and, stay in touch.
I definitely will.
All right, fam.
All right.
Out.
All right. Okay, I'll talk to you guys later.
Justice! Now! Justice! Now! Justice! Now!
racial injustice is still the black man's burden and the white man's shame. So wherever we live in America, we have to face the fact honestly that racial discrimination is present. So don't get complacent. Certainly we've made some strides